I'm Kals, host of The Comparable, the series in which each episode explores two companies building similar solutions in two different emerging markets. For our third episode, we're delving into education technology, and more specifically, we're highlighting two companies building solutions in the test prep space. Test preparation for young students is high stakes, eventually leading to how you get into university, get the right job, and be set up for life. No pressure, right? In emerging markets, traditional solutions to this often focus on private centers and private tutors. While many families will invest significantly in exam preparation for their child's future, the space is often fractured, informal, expensive, and quality can be lacking depending on where you live. During the pandemic, all learning went online and the edtech space exploded as startups built digital solutions to capitalize on this shift. Venture capitalists can operate with a herd mentality, which is an understatement, and 2021 saw record high levels of funding directed to the broader edtech space, and much of it directed towards test prep models in emerging markets, especially in countries like India. In 2022, there was a shift back to in-person learning and the space contracted, or there was a correction, impacting funding levels as investors started to push for monetization and profitability versus just growth. It's impossible to touch on the test prep space and not address the elephant in the room, Byju's. Long seen as the darling of the test prep space, Byju's was once India's most valuable edtech startup with a valuation of $22 billion in 2022. Today, that valuation has plummeted to maybe zero, with stories of loan defaults, bankruptcy filings, board resignations, layoffs. The list goes on. And while Byju's is just one story, its downfall has ramifications for perceptions of the entire edtech space, including on test prep startups. It begs the question, can you actually build a scalable, profitable test prep edtech in emerging markets? My guests this episode aim to prove that you can. Today, we will explore two edtech startups looking to democratize access to high-quality education through technology, with a focus on test prep. Abwaab, which is headquartered in Jordan but building for the broader Middle East and North Africa region, or MENA, and Shikho, building in Bangladesh. Both startups were born in 2019, experienced the growth of users during the pandemic, and adjusted their approaches as learning went back in person. Abwaab, co-founded by our guest, Hamdi Taba, has raised over $30 million in funding from funds like Beko Capital and GSV Ventures. Shikho, co-founded by our other guest, Shahir Chowdhury, has raised over $8 million in funding so far from VCs like Anchorless Bangladesh, Learn Capital, and Sturgeon Capital. And as we do every episode, we'll also feature insights from key investors who understand both the companies and the markets in the edtech space. We're including Rahat Ahmed, managing partner at Anchorless Bangladesh, and Nafez Dakkak, managing partner at Anara Impact Capital. So let's dive right in.
All right, welcome. My guests today are both building leading edtech platforms in their respective countries, aiming to democratize access to high-quality education through technology. Shahir Chowdhury is the founder and CEO of Shikho in Bangladesh, which launched in 2019. Shikho is hyper-localized for Bangladesh, focusing on visual gamified learning and exam prep, with 2.5 million registered users across all 64 districts of Bangladesh. They've raised over $8 million in funding thus far from VC funds like Learn Capital, Wavemaker Partners, Anchorless, and Sturgeon Capital. My other guest is also building with a similar vision. Hamdi Taba is the co-founder and CEO of Abwaab, an edtech platform headquartered in Jordan and building for the broader MENA region. Abwaab also launched in 2019 and combines engaging video lessons with continuous assessment, personalized mentorship, and community support. They have over 300 teachers on their platform. They've raised over $30 million in funding from players like Beko Capital, 40X Ventures, and GSV Ventures. Really excited to have them here. So welcome, guys.
Thank you, Cass. Very excited to be here.
Thank you.
Excited to have you. So, I mentioned this in the intro, but you both started your edtech platforms in 2019. And so as we know, in 2020, the pandemic hit and we saw all learning go online. This was a massive boom for players like you, but I'm curious about how much of that behavior change stayed when things started opening up again. We obviously saw that boost. And then in some of our markets, including in Pakistan, we saw people want to go back to being in person. Can you both share how Abwaab and Shikho capitalize on people going online? And what did you guys do to keep your users loyal to you even when they could go back to their old ways of learning? And so maybe Hamdi, do you want to go first and then Shahir?
Absolutely. I mean, COVID was an extremely unique incident in history where even my grandparents started to shop online. It was a turning point, I think, for humanity. So for Edtech, to say the least, it was like a clear-cut thing where people were going to revert to learning online because students couldn't stop learning for like a year or two, and you had to revert to that solution. And governments and schools kind of like tried to get creative with how they take the learning experience online. Some of it was purely on like Microsoft Teams, Zoom, and Google Meets. Some Edtech startups emerged. Startups like Abwaab and Shikho actually had just been founded, and kind of like it was a pure coincidence that COVID came about, and we ended up, for the lack of a better word, riding that wave. Look, for Abwaab, at the peak of COVID, we actually went a bit out of our business model, where we stepped in with the Ministry of Education purely to kind of like support in students starting to take their lessons online. It was different from what our typical product experience was. We had anyways just launched for like a couple of weeks. And we thought it would be a good opportunity, first of all, to give back to the community in such a tough time, but to also gain a lot of traction and marketing. And over there, probably if you plot the amount of adoption for EdTech was like at its peak, because people just didn't want their learning experiences to be disrupted. Naturally, after that ended, some people either had like a complete reverse reaction of saying, listen, I just want to go in person and sit with the teacher. But others also saw value in saying, listen, I'm saving on time, cost, money, efficiency, so many things. So I think it kind of like started to balance out into figuring out the balance between online and offline. I think before I pass the mic over to Shahir, the last thing I would say is we try to do a few things where we've been trying to meet the customer demand for that. So right now on Abwaab today, and I think Shikho have been doing the same, we do offer like hybrid or blended learning experiences. So you are able to come in and learn certain lessons online, but if you really want to get test prepped for finals, you can come in and receive like your tests in an offline center where it simulates the testing environment as you would be experiencing in the final national exam of the Ministry of Education. So we've been trying to hold that balance with students to make it as real as possible.
Can I, before Shahir, you go, I'm curious in terms of the mix of online and offline, was that because you saw, just where people's attitudes were going in terms of wanting to, because there's a real behavior change when it comes to really staying fully online, especially in our markets. And so was that a response to people wanting to still be in person and how you guys adapted for that?
Yeah, it was a pure like response. We were like just following demand. Students were coming to us and saying, listen, we still want to have like this offline element. It gives us an experience that's a bit closer to reality, because final exam, like high stake exams and national government exams involve a lot of stress, anxiety, buildup of fears and emotions and things. And I was actually sitting in one of our offline centers with a bunch of students, and I was telling them, listen, we're giving you the chance to pay online, to pay like a lower amount and get tested online from the comfort of your couch at home, and we're going to give you your results. Why do you opt to pay us more money to come and get into the whole logistics of transportation to the center, get the test and leave? And the answer was very simple. They're like, we just want to make sure that we simulate the real life experience as much as possible. So it really has been like a response to students' demands and adapting to what the market wants. Obviously, you try to influence behavior to a certain degree in what you believe delivers the best learning outcome to students, but you also need to cater for like emotions and requests and demands from students.
Love that. Shahir?
Yeah, no, I think Hamdi mentioned something that's very important. I think it was almost coincidence that we started off in 2019. A lot of the investors I spoke to later thought, hey, did you launch Shikho just because of COVID? COVID happened sometime during 2020, but we weren't really that mature enough as a product. I think Bangladesh is an ecosystem in terms of EdTech had only just really started. So unlike other markets, so if you think about India, right, like India already had a good 5 to 6 years of proper like investment and a build out within some of their larger edtech. So they could really capitalize on the fact that effectively COVID shut down offline schooling. And then anybody who was actually going offline automatically switched to the online version because there was a good enough awareness in the market. I think at least if I talk about Bangladesh, what happened with COVID is it accelerated the understanding of what online learning could be. Because before that, nobody fundamentally even understood that you could actually learn, using the internet. So and specifically from Bangladesh, I think it's 18 months, maybe 20 months. So 20 months of school closures. I think Uganda is probably the only other country that had a school closure longer than that. So parents, teachers, students, the government all had to effectively go online to do any sort of learning. And because you didn't have any schools. So what I would say is that COVID definitely helped accelerate the understanding of what online learning could look like. It helped us launch, and when we launched, therefore get some initial traction, but it never really actually accounted for real business growth. Unlike what happened in India, because you had a lot, you had monetization at scale when that happened. So the reason I say this is when actually schools reopened, we didn't really face that much of a downturn in terms of the users, because the users who were using Shikho eventually stayed on to use it as a supplementary tool to what they would do offline. And what we're now finding is there is a gap in the market where, as Hamdi rightfully says, for test prep, you're never going to be able to take all of that online. There has to be an offline element to it. Like right before the exams, you want to be in a very stressful exam situation and you want to write down exactly how you would during the exam. So that exam environment, I don't think we'll ever have it like for like online, but the things that we can give online that offline can't effectively do is, for a lot of our students, fundamentally what we're doing is giving them much better teachers, access to amazing teachers, regardless of where you are in the country. So if I can talk about Shikho, for example, even though, COVID means that schools have reopened, for a lot of our rural user base, which is 64% of the registered users today, they can't access the quality or grade of teachers that you would get in sort of urban Dhaka or the urban metros. So it really isn't, the equation of schools opening or not opening doesn't solve for the fact that they don't have geographical access to these really high quality teachers. We're all migrating to the urban centers because that's where the economic opportunity is. So the basic problem that we're solving, at least at Shikho and in the Bangladeshi context, is 2/3 of the students live outside the urban areas, the metros, but all of the best teachers are inside these metros because regardless of where you're coming from, you migrate to the metros to get the best economic opportunity. So that access to high quality teaching can only happen through digitization.
Yeah. And on this, right? Because, I mentioned earlier in the intro that you have students across all 64 districts in the country, right? And obviously, Bangladesh has a lot of split between rural and urban. You mentioned, the fact that people who are in kind of more hard to reach areas don't have the same access that people obviously in cities do. So I'm curious in terms of, the strategies that you found in terms of localizing the content, the user experience across all these different districts. What were some of the things that you found most effective and how you guys localized and built?
Yeah, so no, the really good thing about Bangladesh, Kalsum, is the fact that it's a very homogenous market, right? So again, if I compare it to India, right? So India, if you quote the total numbers, the number of students are much larger. But in Bangladesh, we have 85 million as a population below the age of 25. Of that 85 million, there's 41 million students that are studying for the Bangladeshi national curriculum in Bangla, right? And of those 41 million students, they're all studying the same syllabus. So unlike, in neighboring India, where you have multiple different curriculums, you only have one national curriculum here. So the localization that we did was to say, we've got Bangla language learning and we've got one national curriculum. And what we wanted to do was make sure that we have the highest quality for those two that fit those two things, right? So we have a natural moat in the sense that nobody else is doing that apart from the Bangladeshi Edtechs. Like you don't have regional players who are going to be able to do this because you have to know the curriculum in depth. What we then do is we employ some of the best teachers, right, who work with us and subject matter experts who've come from, I guess, the highest quality education in the country nationally, right? So the right schools, colleges, universities have given all the most competitive tests. Some of them even the civil service exams, and they're civil servants, but they're also doing teaching on the side. So these are very aspirational figures who've gone through these very competitive exams, who are designing for this national curriculum in Bangla. So that's, I think, from a content perspective, all of the localization.
Hamdi, I want to move over to you because, obviously Shahir was talking about the fact that they're actually only building for one national curriculum. You guys are headquartered in Jordan, but you've been building for, in other MENA markets besides Jordan. What I've seen is Egypt, Iraq, Saudi Arabia, all have their own different national curriculums that you have to adjust for. I'm curious about, how you think about, Jordan is a smaller market, but it's a great place in some ways to be headquartered from and built from outside of that. How do you frame Jordan for yourselves at Abwaab? And then also, how do you think about growth across the region? How have you thought about, localizing and adjusting for the different markets that you've entered? And then final question, what do you do when growth to a new market, like, we can talk about, you guys attempted to grow to Pakistan, decided to pull back from that. What do you do when you figure out it's not working?
On the first one, the way we look at Jordan is, I think it's an excellent country to launch from for multiple reasons. First of all, it's small, so you can afford to make mistakes that won't cost you a lot. There's a lot of tech and engineering talent that is well educated and not extremely expensive, which makes it an extremely strong platform for tech companies to launch from. It's a highly competitive market, I would say, which means I tell my friends, like, if you're able to make it in Jordan, you'll probably be able to make it anywhere. Because
I think probably most emerging market people will tell you that about every emerging market, right?
I mean, look, we operate already in like 5-6 countries in the region. So I do have experience in some of them. And I can tell you that Jordan specifically is quite intense in terms of competition. And when you compare it to its size, it makes it quite challenging. I mean, it's just a population of 10 million people versus other countries like Saudi, Iraq, and Egypt. You're talking about 40 to 100 million of population. So I think these ingredients just make Jordan a good place to launch from. It has a relatively good track record of tech companies coming out of it. And the overall environment and the ecosystem just makes it a good place to do. I mean, I would do it again. If I would launch a tech company from scratch, I would still launch it from Jordan. So, I mean, for these reasons, I feel we're in a good spot to have to be able to call Jordan like our home and HQ and base for the region. Now, when you come and think about the region, obviously there are challenges and opportunities about the whole Middle East, North Africa. As Shahar mentioned, it's not a homogeneous market in terms of curriculum, but at the same time, all of these countries are Arabic speaking. So there are a lot of commonalities in terms of culture, the way people think, etc. That's one. And second, during my time at Uber, I was inspired by Uber, but I was also inspired by my direct rival, Careem, which was later on obviously acquired by Uber. And I think two things stood out for me here. One is the aggressive and rapid expansion. Uber grew from 0 to 600 cities, I think, in a couple of years. So that kind of became part of my DNA that I infused and injected into Abwaab. Try to get at least the good things from the Uber culture into Abwaab. You can probably feel it between the team. And it truly has become we talk about Abwaab DNA all the time in the office. about like moving fast, thinking bold, feeling the passion of the mission that we're doing. So from the day I started, it was a regional play from the get-go. It wasn't like I'm gonna build a business in Jordan and then if things go well, I'm gonna expand. I left my job at Uber because I wanted to build like a regional edtech player. So that was the strategy from day zero. And then the inspiration that came from Kareem was that competing against that company, one big challenge I was facing all the time is they were extremely local. I mean, you would go to Egypt and people would think it's an Egyptian company. You would go to Dubai, people would think it's an Emirati company. You would go to Saudi and they'd say, it's like a Saudi company. Genuinely, that was one of the things that inspired us to approach EdTech in this way. And, you know, education is like even more sensitive because you need to have the teacher kind of like speak your local dialect, understand the nature of questions that you receive in an exam. There are like sometimes even inside jokes on a country level of how to understand a certain scientific or academic concept. So it's extremely important. When it came to Kareem, it was basically the marketing of Kareem that was local. And we found that to be extremely powerful. So when we started something in the EdTech space, we realized that we need to be like 10x more localized because of the nature of the academic and learning experience in the EdTech space. And that's the approach that we took. So right now at Abwaab, in every single market that we operate, the whole content, curriculum, and learning experience is 100% localized to that country. You would be studying in Egypt with an Egyptian teacher, speaking to Egyptian teacher assistants, watching Egyptian content, solving questions from the Egyptian national curriculum past paper exams. It's 100% localized. Obviously, it creates an operational challenge for us to be able to scale it, but we also have a good number of people from the team that have various experience in the tech space, both ride sharing and other things, where they've been able to witness that in their career, regional expansion and operational execution.
Mm-hmm. And on the last part of it, yeah, Pakistan, and when things don't work.
Exactly. Look, so Sabri, my co-founder, is a very big fan of failing fast. He believes that you shouldn't spend too much time on something that has signs that it's not working. And for us, when we launched Pakistan, it was kind of like a coincidence because some of my ex-Uber colleagues actually had been launching a startup in Pakistan. We're speaking about the market like 1.5 years into the launch of Abwaab. We liked what they do. Our missions aligned, our values aligned. We're like, listen, let's just join forces. We'll acquire you guys and you can just like run and build the business and we'll take care of everything else, build the tech product, take care of the fundraising, etc. And then 1.5 years in, we realized that, first of all, we hadn't found strong PMF ourselves as a company, to say the least. So we kind of like ran too fast into expansion and running acquisitions. The second is Pakistan as a market is quite unique. It has its own sets of macroeconomic challenges, political challenges. At the time, it was like, there were like some environmental challenges as well. And if you look in even deeper into Pakistan, you have 4 different boards, KPK, Federal, Sindh, and Punjab over there. You need to micro-localize the experience. If you're taking the approach of Abwaab of localizing the academic experience, then you need to do it for 4 different boards in Pakistan. And for these 4 different boards within these provinces, some people don't even speak the same language or dialect. Which makes it even more complex. And purchasing power is not super high. And we're going after the approach, at least in the beginning, was like, make the product as affordable as possible. But then we're like, had to sell it for like $1 or $2 or $3. Customer acquisition cost wasn't covering for that. And we're like kind of like spreading thin. And it also came at a time where we started to focus on monetization. And I know we're going to touch upon this in a bit, but at the time we started to focus on monetization, not just growth of engagement and user base, etc. So just all of these inputs made it very challenging to keep on running in Pakistan. And we decided to pull the plug.
Yeah. And I think, and it's super helpful. And thank you for sharing that so honestly as well, because I think we so often talk about success in what we build, but not often talking about, not that this was necessarily a failure, but in terms of what you said, failing fast, like learning when things aren't working. And to the point of what you talked about in monetization, thanks for the layup for this next part of the conversation, because I would say, as a VC that's invested in EdTech, but, we're agnostic. So whenever I look at this space, I always think the challenge in this space is not necessarily user growth, because I think you can have people using the product, but it's actually getting people to pay for the product, right? Especially because as we all know, there's so much free content out there. So many people sit on YouTube and they can scroll things, they can find stuff, they can go on like ChatGPT and ask questions, all of that. So I'm curious about how you guys have navigated the noise in the space of within the space of content, and what are strategies that you guys have clicked with you guys in terms of converting people, into paid users. What has worked for you? And maybe Shahir, if you want to go first, and then Hamdi.
That's a really, really, really important question. I think when we started, at least from Shikho's journey, the inflection point was when we figured out that live classes or live instruction from teachers generally was perceived to be superior to just recorded online content, right? So YouTube, you will have a lot of recorded content from many different teachers of different quality, and people are used to going and finding stuff for themselves. I think the live instruction is a bit different because number one, it's structured, and number two, you have somebody telling you exactly what to do. So at least in the Bangladeshi context, our students like to be guided as opposed to be self-guided. And I think that's a cultural thing. It really just works better when you have the teacher as the focal point, and the teacher is there with you in the class. And then everything around the student, apart from the live classes and the teacher, is basically centered around that class. So we give homework, which is animated video lessons, which is quizzes. You have chapter exams. Based on those chapter exams, you get a report card. But at the center of it, you have this teacher who's telling you, this is the homework you need to do. That's what you got in your last report card. This is how you've got to do better. So that's how we've designed the system. And effectively, that's sort of the USP you have versus the free content that's out there. So at a very basic level. So it's the structuring, it's the routine, it's the guidance, it's the mentorship, and it's that live interaction with this very charismatic, experienced teacher. Over and above that, there's a lot of platform, add-ons that you have to put in there, right? So for us at the moment, our focus is on how do you take artificial intelligence and AI and sort of this wave of like large language modules, and then integrate that into the existing learning experience so that this is something that is completely unique and you wouldn't be able to go and get that in YouTube or Facebook or anything else. So an example would be within sort of the live class that you have now, there's a chat window where you have 1:many. So you might have 3,000 kids in a classroom listening to a lecture from a teacher. At the moment, there's polling that the teacher can do. And then if you chat, sometimes the teacher will respond to you, but not all the time because you can't respond to 3,000 people. But if you had an AI sort of tutor that is referencing the national curriculum on that chat window, as those students were asking questions, they would get instantaneous answers, not from the teacher, but from effectively the artificial intelligence. So that's just one use case we're building. But I think, over time, as we've sort of grown this, people who are using the platform genuinely understand that there's a lot more value. And this is the final point. The final point is, how do you make them understand that there's value? Because if you haven't used it and paid for it, you don't get the full experience. And that's the biggest challenge still.
First of all, I'll skip the parts where there's an overlap because lots of what Shahir said overlaps with us. But asking about the noise, I can tell you that the noise started before we were even founded. When I just was having conversations with people saying that I want to start something in the EdTech space, the first question that pops up, how are you going to monetize? YouTube's for free. And at the time, like ChatGPT didn't properly exist at masses. YouTube's for free. Why? How are you going to monetize it? So going into Abwaab, the first thing that I had in mind, or one of the first things I wanted to prove, is being able to sell the product that we're building. So if you look at the way we approached it, I think it came in multiple stages, obviously also as a byproduct of continuous iteration. But the first thing we did was just try to monetize the product. Sell for any amount and prove to yourself that people are willing to pay for your service. So very, very early on into our journey, when we were just literally barely like just hosting video lessons, not much features were built besides like learn at your own pace videos, we started to sell for like a few dollars a year just to be able to prove to ourselves that people are willing to pay. Once that barrier has been broken, we're like, okay, now how do we create higher value services where we are able to charge something that is commercially viable and also gives enough value to students? And from here, like when you think of value to students, it kind of like Shahar already tapped on these things. Attending live sessions, getting follow-ups, receiving a guided learning experience, getting someone to handhold you and hold you accountable for the work that you're doing. Because let's face it, 14, 15, 16 or like 18-year-olds are not, they don't wake up excited on like, how am I going to study today? They think about like video games, going out, playing with their friends, spending time on TikTok and social media and things like that. So we realized that we needed to introduce this element of accountability in order to make sure that they see value in Abwaab, because bottom line is all of these things are features, but in reality, what's real value to students today and parents? The core of it is I need to study to pass or score a high grade. And it saddens me a bit that this is the case, because obviously my personal mission is much bigger than that. I would like to disrupt education in a way where not just like dropping the word disruption, but really think of how do we educate the upcoming generation to be like more productive human beings, to contribute to like the economy, society, humanity, the world and things. And you can argue that studying to pass for a test is not necessarily the best way to create a productive human being. But at the same time, we're a venture-backed startup that needs to be commercially viable. So you need to balance having something that the market is willing to pay for. And what the market is willing to pay for today is helping you score a better grade. So you start thinking of things that give value, that lead to this ultimate end goal. And then over time, I think you can pursue dreams of unleashing human potential, as we say it at Abwaab.
Yeah, changing the generations, right?
Correct.
I mean, I love that you said this about being venture-backed and what the expectations are from it. I mean, obviously you said, Hamdi, you were at Uber before, your partner, Sabri, was at Greem. These are all venture-backable businesses, but education is such a different animal. It's such a different beast, right? Because it's not something that you can fail fast maybe, but you can't just go and break things when it comes to education, because you're thinking about human beings, you're thinking about their test outcomes. And with education, it really is about outcome, right? So what we're thinking about isn't just like the output of growth, but it's also about, does the prep that you guys are doing actually change the outcomes of how people are testing and what the results are, right? And so there's something almost like a bit of a dissonance with what venture capital as the expectations are of like growth and monetization and all of these things, with the reality of education being not something that is overnight and something that is like really quick. And I'm curious about, for you guys, we've seen some cautionary tales in the edtech space of, the Baijus of the world, but I'm also curious for you, when you speak to these types of investors, who do you see as your North Star of like, this is an example of a company that is balanced, that Venn diagram of like growing and monetizing, but also not doing it at the cost of, losing all these different pieces of what's important at the core of what you guys are building. I'm curious who you both see as that for yourself.
Look, what I'm going to say can be used against me by VCs, but I'm going to say it in the spirit of like honesty and transparency. Doesn't exist today. I don't think there's like this clear global player in the edtech space that has completely figured it out, kind of like the Uber for delivery, the Uber for, dry cleaning, the Uber for food. Like that has in the world of e-commerce and ride sharing and things has become quite clear. But I think for education, the world is not there yet. And the system is kind of broken because if you want to build a scalable, impactful edtech company, you need funding. You're not going to be able to get PE funding, greenfield, because that's not the way they operate. It's very difficult to completely fund it on your own. NGOs have like a completely different dynamic. And then you have VCs. VCs expect a certain specific type of growth and delivery and results. And if you're fortunate enough, like us at Abwaab, where we were able to like, thankfully, get like significant traction in a period of 4 or 5 years, then you're in a good spot. But there are a lot of other edtech companies out there that are genuinely trying to nail it and offer good value with learning outcomes, but haven't cracked like this hockey stick growth that venture funds are after. And these people just dry out of cash. No one's going to give them money. PE is not going to give them money. VC is not going to give them money. They might rely on some like grants and NGO funding that will linger around and just keep them very slow without any growth for a very long time, and then they die. So it is challenging. And obviously, if you have a clear winner globally, it makes two things easier. It makes it easier for founders and companies to kind of like copy the model instead of reinvent the wheel. And it also makes it much easier for VCs. You're a VC yourself. VCs are perceived as risk-taking, but in reality, VCs are just trying to minimize the risk as much as possible. So if you tell them, listen, I'm just copying this model, they're going to be like, okay, here's my money.
Awesome. Thank you guys both so much for being part of this episode. I learned so much from this and came to this conversation with so much curiosity, and really appreciated both of your honesty and how you showed up for this conversation. So thank you guys. Welcome back. This is a segment we call Investor Insights, where we sit down with key investors involved in the companies and markets we highlight each episode. We'll cover the market opportunity and challenges, and also delve into some interesting insights and takeaways about both Shikho and Abwaab. With me today, I have Rahat Ahmed, founder and managing partner for Anchorless Bangladesh, a Bangladesh-focused investment firm. Anchorless co-led Shikho's 1.3 million seed round with Edtech fund Learn Capital in 2021. Rahat has been a champion of about the market of the Bangladeshi startup space for years now, and I'm excited to hear what he has to share about the edtech space and his perspective on Shikho's growth over the last few years. My other guest is Nafez, Dakkak, managing partner at Anara Impact Capital, a $50 million fund that invests in learning, well-being, and environmental resilience across the Middle East region. He's been a thought leader on innovation and education in the MENA region for years. And while he was not an investor in Abwaab, he's joining us today to share insights on edtech in the region and Abwaab's place in that growth. So Rahat, first question for you. When Anchorless invested in Shikho's seed round in 2021, you were quoted saying, Bangladesh is one of the largest allocations of private education expenditure as a percentage of disposable income in the world, but lags behind countries like India and Indonesia when it comes to edtech funding. Can you share more about what led you to invest in edtech and specifically Shikho in 2021 when you did? And how have you seen the sector evolve since then? And how do you think Shikho continues to leverage the ratio that I mentioned to its advantage?
Great to be here. Shikho is actually one of our earlier investments, and it's been great working with the company. Just for context, we're a New York-based fund. Our LPs are primarily American and European. I think that context is important because our investors are looking for macro exposure to a country that is one of the fastest growing in the world, but doesn't have liquid assets, for example, easily accessible equities at the stock exchange globally, et cetera. So again, when it comes down to it, it's macro exposure. And education in Bangladesh, because of some of the points you mentioned, is actually a great proxy for consumer spend and general economic growth. I'd say in late 2020, we actually did a deep dive into the education sector. I think we canvassed nearly every organization in the sector to better understand what existed and where the gaps were. Part of what made us believe in Shikho is, first, they were tech focused in how they were going to scale versus tech being, an after fact where they already had something going. From day one, they had a long-term vision. Second, we felt that Shahir and the company had the ability over a long term to actually provide education-related services for not just test prep, but going from grade 6 to the day somebody retires, thereby having the opportunity to become the de facto education company in the whole country. Since we invested, I think there's one thing that's really stood out for me. It's arguably the most important thing right now, that the country better prepares its students and young professionals for the future. And that's not just practical education, it's also using data to understand what opportunities are out there. We have we have a very heavy private and public university system, but often I see that the curriculum that's being taught is somewhat outdated. And that is something that Shikho, with this vast database, can actually remedy on the fly. And I think what's really exciting about that, especially over the last 9 months as the government has evolved, is I think both the government and the development sector, which has historically not engaged very actively with the private sector, is now talking to companies like Shikho to see how they can better augment and leverage what Shikho has done over the last few years.
Great. And for Nafez, as I mentioned earlier, you're not an investor in Abwaab, but you know the founders well, and you're widely respected as a thought leader on EdTech in the MENA region. In 2021, you made the case for why MENA's demographics are ripe for EdTech companies to break out, calling the region the EdTech sleeping giant. Much has happened in the last 4 years with players like Abwaab, Noon Academy, a few others raising significant rounds of funding in the region. And I'm curious from you, how far do you think the region has come in terms of the EdTech sector? And how do you see Abwaab as part of that growth?
Yeah, no, I mean, thanks again for being here. I think the first thing, just start with the last question. I think Abwaab has come a long way, and I think Abwaab has been quite significant for the sector. I mean, Hamdi, Sabri, and the team, and like they're sort of incredible operators. They bring a lot of credibility. And although maybe sort of Noon and Classera are, two other edtechs that have raised significant rounds, Abwaab, in my mind, is probably the first or the largest round outside of Saudi Arabia. So that really signaled to a lot of founders in the region that this is a serious space, that this is a space that could, raise a lot of money. And I think, Hamdi and the team have done a kind of great job in sort of proving that, expanding to new markets. When I look at the market as a whole, we kind of wrote the piece in sort of 2021, Mushtaba at GSV and I, we talked about sort of three, I guess, specific challenges like for the region seeing it growth. The first one is sort of fragmentation. I think that is still there. And I mean, there's still a fragmented market. I think there's certainly a bit of hype, but with a lot of sort of the AI, LLM content generation, you can actually now overcome that fragmentation pretty quickly and much faster. And you can localize across sort of countries, sort of if policymakers collaborate. The other two challenges that we talked about were online payments and exit. And I think there's been a lot of sort of improvement there. I think when in 2021, something like 60% of people preferred cash on delivery for anything online, which actually made it challenging. And then Hamdi and the team were initially very innovative in how to deal with that. Now it's down to sort of 40% on average, and in some countries down to 10%, saying that 90% of people are happy to pay online. And exits has also been, I'd say both exits and M&A have come a long way. So there are two recent exits, Anab in Saudi was acquired by PwC, Little Thinking Minds was acquired by sort of CISO in the US, Bames, which is again another sort of interesting Kuwaiti tutoring prep company, acquired Orcas in Egypt. So there's been a lot of interesting liquidity around sort of that exits that got investors a bit more confident about the space.
I think that's great. And also, I mean, to the point of what you were saying, we invested in this space in Pakistan as well. And I think what's interesting about MENA is to the point of what you were saying, it's like, it's all of these different factors coming together at the same time of how people are thinking about payment, seeing liquidity in this space, so attracting other types of investors. I think that's all important. And I think, our focus this episode, Nafez, was on exam prep models via the lens of Abwaab and Shikho. But, as you know, because you talk about this space and you invest in it, you cover it, EdTech as a whole is so diverse, from startups building management systems to skill building. I mean, you mentioned, Little Thinking Minds and a few other players even in that region. Venture capital. And Rahat, I really want to hear your thoughts on this too, because I think about this as an investor, as a VC investor myself. Venture capital is such a tricky beast because you invest in models that can show hockey stick growth, which in EdTech can be a little bit difficult, right? And especially in emerging markets, right? We can show that these spaces are worthy to invest in, but can it show the type of growth that's needed for this asset class? What do you think investors, Nafez, need to pay more attention to when they look at the EdTech space in the Middle East? And what do you think are the biggest blind spots? And I want you to answer this question. And Rahat, I would love for you to comment on that as well for Bangladesh.
I think it's a great question. I think the first thing, and maybe actually 2 points are related, is a lot of people in VC, there are people who education has worked well for. They're sort of Western educated, they have a very kind of specific I'd say, view on sort of what works and what kind of founders they will back. Sort of this kind of checklist. Went to a Western institution, worked for a Western company, copying sort of a Western model. So check, I'll invest. And I think that's pretty dangerous. So I think that's the kind of first bias to sort of get over. The second one, and I've actually written about this a bit and probably need to update it, is it is tempting to kind of slice MENA, one, to think of MENA just as one blob, or slice it, North Africa, Levant, GCC. And I also think that is something investors need to look out for. I talk about like MENA 1, MENA 2, MENA 3. And the simplest way to think about it is MENA 1 are economics similar to a country like France.
Yeah, it's like the GCC, right?
So it's not just, and I think that's a great nuance there, is you have MENA 1 in Egypt, you have MENA 1 in Jordan, you have MENA 1 in Morocco, and their segments are certainly smaller than the GCC. And those kind of like, it's French economics, French kind of GDP per capita. And also a lot of these people are sort of English first in terms of consumer adoption. So if you have product market fit in the US, you can probably easily kind of expand to them. And maybe the poster child of that is Dubai. But even in Dubai, right, just to go back to the end of the spectrum, there is MENA 3, people that, actually don't speak any English, are more comfortable in sort of, or actually only comfortable in Arabic. And they require kind of a different product. It's a different sort of market size. It's a different sort of purchasing power. And I think you need to be very clear around, okay, is this solving a problem for the right MENA? And then when you go from MENA, and if it's a product that can do all MENA from 1 to 3, how is it kind of changing to make sure it has product market fit?
I love that. I listened to a presentation about India, and they similarly talk about it as like India 1, 2, and 3.
So this was inspired actually by some work I looked at India, where they talk about it a lot.
Cool. Yeah. Because from a VC perspective, I think it's mostly India 1. Now it's like India 1 and 2. And India 3 has not been attacked at all. I think Nafez was talking about the fact that there's a lot of liquidity now in the MENA market, right? So especially with exits happening, there's just a lot of investors that are coming in there. Bangladesh has kind of had the opposite problem, as you know, because you've been kind of beating the Bangladesh drum for so long of like capital scarcity. And you were part of like Learn Capital came into the round that you were in, like other outside investors came in. But how has, with like cautionary tales like Baiju's, the slowdown of Edtech funding overall globally, right? How has that influenced how you talk and support companies like yours, like Shikho, and what do you think investors should focus on when they look at this model?
I think in a funny way, what's been great is the market has not been flooded by easy capital, and that has forced companies to become much more diligent in how they approach their product market fit, the unit economics, their fundraising pipelines, etc. I will say, after Baiju's and some of the other companies, there were short-term hiccups. I think we actually did the deal with Learn the day the Chinese came out with their new move on the nonprofit side. So it was a very interesting time to make that decision. But I think the long-term macro story for Bangladesh remains very strong, arguably one of the best in the world right now in terms of risk and reward. And so I think in step with the general venture slowdown that we saw, Shahir and the company have really fine-tuned their product market fit to increase their capital efficiency. And I think that's only made them a lot more attractive for investors who may be slightly more conservative, but also de-risks a country like Bangladesh in their minds. And I think also gives Shahir the opportunity to be more deliberate in choosing the investors he wants to work with, which I think is actually a luxury for funds or for companies that have raised perhaps a little too much. I think in general, for global investors, I continue to urge them to look at Bangladesh as perhaps one of the last great markets. And when I say that, I think I often say Egypt, Bangladesh, Pakistan, and Nigeria might be four of the last markets of a certain size with a certain demographic that are still underfunded. And right now, Shikho is a very, very good way to, again, get proxy into this economy. It's not just an education company because education is so embedded in the culture.
The education landscape is evolving quickly because of AI and other things and other technologies that are happening, and how companies are leveraging it for learning, but also how behavior is changing, right? I think about this as a mom. My daughter is quite young now, but I think about the world that she's growing up in and what AI will mean for her later on. How do you both see the future for EdTech in MENA and Bangladesh? And how can startups like Abwaab and Shikho innovate and stay ahead of this evolution?
It's a great question. Obviously, no crystal ball. But I don't know if you guys saw the recent Apple paper on, basically LLMs can't reason, LLMs can't think. And we have a saying sort of in Arabic, and I think, I'd say especially in Jordan, about we say that the student is memorized, they haven't understand, it hasn't understood the assignment, and that has a much better ring in Arabic. But I think that's one thing that AI has done really well. It's kind of, we've always known education was broken. AI is now coming and saying, well, actually you need to fix it or somebody else will take over. And I think that comes down to three things, if I want to kind of just try to bucket them. I think student and learner motivation matters more than ever. Because at the end of the day, yes, if you have an AI assistant, if the AI can help, what will you actually ask ChatGPT to do? And will you actually go down a rabbit hole, or will you ask it to just do the things so that you don't have to do any thinking? And that ties nicely, I think, to the next point, which is this whole idea is that we've convinced learners or students that it's all about the outcome. It's just the output. Well, actually, the LLM can probably get the output.
It's about the output.
Much better. So we actually need to go back and convince students and learners that this is about the process. I think that's something that a lot of edtech companies in the region, not just in MENA, but certainly in MENA, will just need to struggle with. How do you incentivize the students, the learners to actually go through that desirable difficulty when actually they could just ask ChatGPT for the answer? And last but not least, to bring it all together, is that you now really need to teach for deep understanding. And that's, I think, it will motivate people, will convince them to go through the learning process if you can show them that actually it's not about memorization. You'll learn with me, you will learn better, and it will just kind of put you head and shoulders above everybody else.
Thanks for that, Rahat.
I'm going to preface this by saying I'm not an AI expert. I don't want to, it's something that I want to stay away from generally, but I will say this. I think Shikho has thought ahead. Shahir has shared some materials with me that I'm very excited about. And I think one of the key factors is that data that Shikho has that is able to capture for a language and a region that is historically neglected, including West Bengal, is quite valuable. And I think what they have right now is just the beginning, and their ability to leverage that data set into multiple products down the road is, I think, something that we believe can be quite valuable. For instance, I think the World Bank has a multiple 9-figure deal with the Bangladeshi government to improve education. However, there's been almost no engagement with the private sector in that. So the amount of data that Shikho has, because of its architecture, is not something that exists currently in the market. So if we see better, engagement on these sides to work together, I think the ability for Shikho to help and provide products in the back end, like learning systems for public schools, et cetera, is quite massive. And so that keeps me excited, and then also allows the company to evolve in a way that perhaps we didn't expect on day one, because let's be honest, when we invested in Shikho, ChatGPT was in its infancy. And I don't think I would have realized how many times I load up ChatGPT every day right now versus back then.
I know you just said that you're not an expert on AI, and yet all of us probably leverage AI on a daily basis for what we do and how we manage the world. Right? And I was just listening to a great Ezra Klein podcast about education right now. And it seemed to me that, schools immediately, when AI was coming about, schools were just shut down, don't use AI, block ChatGPT, block plagiarism checkers, and then kids found ways around it, right? It's they told ChatGPT as a prompt, it's write this paper for me, but actually dumb it down, because otherwise the plagiarism checker will be. So I think we just have to acknowledge that this is going to be part of the future. And how do you, I think for both Abwaab and Shikho, but any edtech that's coming up in emerging markets, it's as to what you said, Rahat, it's you have access to data that is actually quite unique, and with these users that are a little bit different. But I also think that if you want to stay ahead of the curve, you kind of have to acknowledge that it's not only the future, this is the present, right? And both Abwaab and Shikho did not exist. They were both born in 2019 before all of this happened, right? So I think things are moving really, really fast right now, and it's going to be really exciting to see how they both manage it, how they navigate it. So thank you both so much for being here today and for being part of this segment, because I think it provided a lot of really interesting, nuanced insights to the whole conversation. Thanks, guys.
Thank you for having us.
Thank you for having us.
That's it for episode 3. Thanks for tuning in, and I hope you learned as much as I did. Stay tuned for future episodes, which drop every 3 weeks, looking at 2 models building similar solutions in 2 different emerging markets. See you next time. Bye.